Hi, good evening, folks. So, welcome to the Funds Helpline channel. So, today is the part 2 of the debt mutual fund. Today we'll discuss some of the technical points, how to select a fund, what are the parameters you need to look at. We'll talk about the different credit rating aspects. We'll talk about the fact sheets of the debt mutual fund, what are the important points you need to look at, and how to analyze. So, let's start. First we'll talk about the different credit rating of the different categories of debt product. Like your if you see in a portfolio of a debt mutual fund, there are a lot of ratings is given. Ratings like you see there is a AAA, AA minus kind of option in written after the different debt instruments. Apart from that, some of there is a gilt and all, or the GSEC paper, the sovereign is written, some of the there. And so what is this rating is all about, so that we'll discuss. So first where we see that the sovereign or the government of India paper, these are basically the so-called sovereign. These are the highest rating. Next you will see some of the papers, there is the SDL is given, that is the state development loan, that is the different state, whatever the loan or debt instrument of the different state. So this is also considered one of the considered next to the government of India, because this is also considered as safe investment. Next is your PSU bond. There are different PSU they issue, like your NTPC, Power Grid, NHI, they have a different debt instrument they issue, and their paper also considered to be safe, and the next to the safest category next to the government of India's debt. So next part is your AAA. You will see there are a lot of AAA papers are given. There are a lot of bonds where the AAA is written. The AAA is one of the safest category in the debt mutual fund. After the PSU bond, the AAA bonds is the corporate AAA is the safest category. Into the corporate bonds segment. So then there is a the AAA. After AAA, there is a AA plus, AA minus. These kind of rating, as the goes down, as the risk parameter increases, the corporate profitability balance sheet means it depends on basically the corporate profitability balance sheet and structure. So as per that, there are rating organization like CRISIL, ICRA. They decide, they work on the rating of the companies, and based on the different parameters they decide the rating of the company. And as per the scenario, they also upgrade, downgrade the rating, give the outlook on the rating, positive, negative, or is there a stable outlook. They also give that. So accordingly, every maybe depending on the different activity into the corporates, or every 6 months or 1 year, they analyze the what is the situation of their corporate. If there is any change in the corporate, so according to their parameter, they analyze that, and they upgrade, downgrade, and rating as per that analysis they do it. So these rating agencies are very, very important. And not only they also do the valuations for the bond also. So they have a different every day, not all bond are traded into the market, but most of the bonds are valued by these rating agencies like CRISIL and ICRA, and according to that the bond price is decided, and this price and NAV is declared every day. So this is the basic understanding of the credit rating of the different instrument. Now we'll look at what are the important parameters of the debt mutual funds you need to look at. The first, the fact sheet of any company. You see where the debt mutual funds is different scheme of in fact sheet. You see that there is a different scheme details is given in a debt mutual fund category. In a fact sheet, they will see there are generally 5 to 6 main parameters are important. You can divide the fact sheet into 4 to 5 parameters. First parameter, you see that the return aspect is given. Second, the fund details is given, the fund name, the size of the fund, when it was issued, the expense ratios and all. This is the second part is given. Third part, there is a there is a quality, means quantitative indicators is given. These are very important. Fourth, the portfolio construction mechanism, means what are the different instruments there are in portfolio, that is given in detail. Fifth, there is a style box where is the details of the, means what kind of style they are following, whether they are putting the money into the sovereign, AAA or AA, where they are putting the money. These details is given in a style box. Then there is the rixometer. So these are the 5 to 6 different, you can divide the fact sheet in for these 4 to 5 categories and look at and analyze. You can do the analysis of that. So first, the return. First part is the return. The return, you see, you look at the what is the average return of last 3 years, 5 years, 10 years, 1 year. You look at them, and also you need to look at the rolling return also, how they are performed across the different market cycle. Though in the debt mutual fund, the past return just not matter, because the past return just can give you the indication of the long term pattern of the return, but that will not indicate in especially into the in duration categories of fund, that will not give you any idea about what kind of return you can expect in next one or 2 years. So this is a basic guidelines of the fund. Next part is the fund details, where the details of the fund, the size of the fund is given, the expense ratio is given. These two are important. The size of the fund, because in a debt fund, as per the size is very important. If the size of the fund is very large, so that will help the fund manager to diversify the portfolio, because diversification is debt mutual fund is very important. It's not like equity fund where you can run the concentrated bet. In the debt mutual fund, the portfolio diversification is very important. As you do the much diversification, generally the risk goes down and concentration especially goes down. So diversification is very important and must for a debt mutual fund. So bigger fund having the bigger diversification, as the size of the fund is big, also the expense ratio of the fund generally comes down. And also, if you see those funds which are size are big, generally the institution investor are investing on those funds. So if the institutional investor are investing, because the institutional investor are generally considered to be having the good knowledge and they have an idea of investing. So if the institution are investing in some fund, so there is must be some credibility on that fund. As a layman, you can consider that also as important factors. Next is your quantitative factors. There are 3 to 4 parameters are very important. The quantitative factor, first is your yield to maturity. The yield to maturity of a debt fund is very critical. Generally in accrual category of fund, yield to maturity will give you the idea, the expected return, what can you get in the particular fund. And if you deduct the yield to maturity from the expense ratio from the yield to maturity, that will give you the basic idea of and return expectation, that will help you to get the idea. So yield to maturity is important. And next part is your the duration of the fund. If you see, some of the funds are different fund having the different duration, so you need to, as per your investment horizon, so you need to choose the fund so that your investment matches the duration and the paper of the fund. Then only you can expect that the whatever yield to maturity is there in the fund, you can also expect that kind of a return. So this is very important. And also the sensitivity, if the duration, you must understand if also your duration of the fund is also sensitive to the interest rate risk. If the interest rate interest rate go down, your fund the fund will return will be better, fund return will go as per that. If the interest rate is goes up, if the duration is high, so it will react on that basis. So sensitivity of the fund is depend on the duration of the fund. Next point is the your modified duration. This is very critical. This is based on this this is the instrument based on this. Generally the you can identify if there is a rate hike, interest rate hike, how can this fund return can impact due to rate hike or rate cut. See, for an example, if the modified duration of a particular fund is 5 years, and there is a there is a rate of a change of interest rate of 50 basis point, then you generally can expect there is 2.5%. If the rate cut is happen 0.5%, you can expect the fund will give the fund will sensitive to the interest rate, so it will give you 5 years duration 0.50% rate of interest, means 50 basis point change is rate of interest. The fund will give you additional 2.5% return. So this is very important and sensitive. So if the fund modified duration is high, so the fund will react to the interest rate a change in the bond yield very sensitively. So you must understand, especially in case of gilt fund and duration fund, dynamic bond fund, long term fund and gilt fund, this fund is very sensitive to the rate of interest. And here the fund manager generally manage the fund based on the duration risks and interest rate risks. So according to the market condition, macroeconomic scenario, economic cycle, rate of interest rate cycle, they manage this fund so that you get benefited from interest rate. If the interest rate goes down, you can get benefit from this. And also in case of if the interest rate goes down, so on that point of time they generally keep the duration low, so that there is a less negative effect happen in the fund if the interest rate goes up. So thus they basically manage the interest rate risk in this category. So you need to analyze these three parameters in detail, then only then only you can understand how the fund is positioned and what kind of return you can expect, provided if you have understanding on the interest rate cycle and macroeconomic indicators, you have some ideas on this. Next part is the portfolio construction. This is very critical. As I told earlier, in the debt mutual fund, you need to reduce concentration risks. If you have the high concentration, this fund concentration in the portfolio, then this is one of the biggest risks that is running by the fund manager. So in a debt mutual fund, you must try to reduce the concentration risk. So look at the fund which are very well diversified, more number of different instruments are there. So you look at the fund which are very diversified, means there must be some GSEC, there must be corporate bond, there must be treasury bill, and there must be if the fund is investing more in a corporate bond. So you look at the portfolio, the fund should be constructed with if the fund is having the more of a AAA kind of a PSU kind of a bond, then that is this fund is prone to the low risky, considered to be low risky. If the fund is having the AA, A minus kind of a paper, means this fund is taking high credit risk. So your fund is means on that basis your fund is sensitive to the high credit risk and liquidity risk. So you need to analyze the fund portfolio in detail. Rating of the fund, of the fund is very means different bonds rating across the fund, diversification, these are very important and critical point. You must analyze this in detail. So then there is next is your style box. Style box means where will give you the idea where the fund is putting money. It is putting money into the government bond, in what kind of rating they have, where is putting, there is putting government bond PSU, they are taking the aggressive call, their rating is down, or they are putting the money with a high credit rating instrument. This tile box will give you that idea. Next is your the Rixometer, that is basically very important. This Rixometer also give you the understanding, help you to understand what kind of risks this fund is taking. So as per SEBI guideline, the fund, the Rixometer will show the picture of the fund risk taking. So this is very important. So you must analyze these basic parameters whenever you choosing the fund. You need to analyze these parameters. If you are still not able to understand these points, so if you have any problem, please write us. We will definitely try to keep it more simple and also help you to understand the different aspects of analyzing of debt mutual funds. So any issue, please contact us. If you please take the help, so we'll ready to help you to learn these things. So hope this basic idea will help you to understand some of the important parameters of debt mutual funds. So if you like this video, please share this video among your friends and families, and also subscribe to our channel, so that whenever the next part is coming, you will be definitely get a notification on this. So thank you very much. Thanks for the watching.